Investors kind of took a little bit of a breather today, but stocks have come a long way in a hurry.
You know, Tyler, a lot of people are calling this the Teflon market, and here's why. The major stock averages keep stacking up new milestones. It seems nothing can stick to them and stop the steady climb higher. Stocks were down a bit today, as Tyler said, but the Dow still closed above the 15,000 level, and the S&P is still solidly in record territory. The Dow fell 22 points, the Nasdaq slipped by 4, and the S&P lost 6 points. Investors reacted early on to news that first-time jobless claims fell to a 5-year low last week. And the U.S. dollar gained strength, topping 100 Japanese yen for the first time in 4 years, which likely triggered a lot of programmed orders to sell. But investors still seem to be in the mood to buy, and the major stock averages are up double digits this year. And most Wall Street pros are feeling bullish about the outlook.
But not our guest tonight. He is predicting a stock sell-off starting by the end of this month. He's Uri Landesman, president of Platinum Partners. Mr. Landesman, welcome to NBR. Glad to have you with us. You think that equities could begin a slide, maybe we started to see a little bit of it today, that could take 15% off the value of the S&P between Memorial Day and Labor Day. If your prediction is true, how can I protect what profits I've made and still leave room for more as a kind of hedge?
Well, I think what you need to do is sell out your beta risk, meaning things that are correlated with the market you want to sell, like your long S&P positions, your long ETF positions, and only be long individual equities, sectors, or subsectors where you have particular conviction that they can succeed even in a major correction in the overall market.
Uri, I want to hear what your bear case is, because what we hear from so many of the Wall Street money managers and fund managers on our program saying, where else are you going to put your money? Stocks are the place to be. You know, bonds, you get almost no return. You look at some of the international markets, they're not doing as well as the U.S. market. So what do you say to those people?
What I say to those people is that at the end of the day, always, all securities will eventually trade at their intrinsic value. And the fact that what else are you going to own, that to me is a very, very bearish sign. If that's the only reason you're buying stocks, you're basically admitting that they're expensive and overvalued, but they're less ugly than the next one. I mean, trust me, when people get scared, they're going to liquidate all of their holdings and take their cash and put it in the mattress or wherever else they want. So they don't have to be in stocks just because they look better than bonds or than foreign stocks.
Do you think that stocks measured by the S&P have hit their highs for the year? And if you do, are there certain sectors that you actually believe will hold their value or may go even higher? Are there areas of the market that you like?
Yeah, so I think that we're at or near the year high. I always thought it would come in this period of time. It's gone a little past what my target was, which was 1620. But I think that's why I have such conviction that I think it's going to turn around shortly. I do like certain sectors of the energy segment, particularly natural gas. I still think there are opportunities in biotech that aren't going to necessarily trade correlated with the market. There are selected things in technology that I think are still very reasonably priced. But you have to be very, very careful in terms of where to go right now. You
said that you are a perma bear when it comes to the financials. You don't have any financials in your portfolio. What is your recommendation to people who own some of the, the biggest banks in the country, whether it's JP Morgan or Bank of America or any of the regionals? They should bail out of them?
What I'm telling you is what I'm seeing from these banks right now is behavior that is very akin to 2007. And see what's going on in the junk bond market right now. There are junk bond yields at 5%. I mean, it's insane. And the exposure that the financials have to some of these are massive. I don't think that they've learned anything since 2007. I don't think they have any control over what their risks are or any idea of what their risks are. I would be very, very nervous about holding, especially the major financials.
Let's say I have some of those individual equities that I really believe in, Uri. Is there a way quickly that I can use options like puts to protect my portfolio or hedge it?
Well, I think that you could essentially go short the S&P either by buying puts or selling calls. It's not the cleanest hedge in the world versus individual names. Something you might want to do is to short the ETF of that sector where you like a name. That would be a cleaner hedge.
Interesting. Uri Landesman, thank you very much. President at Platinum Partners.